Hi, this is Mark Turok from Exeter, 1031 Exchange Services, and with me again, this is joining me monthly is John Bacigalupi from Cantor Fitzgerald Capital, and I've got Robert Zink from Whitehall Securities. And today we're going to talk about, well, from my perspective, unraveling mysteries of 1031 exchanges and then the DST strategies, especially in today's market where everybody's selling. So talk through the like-kind exchange process, talk about the DST and where that fits into that whole element and what's going on, the latest. And also, I'm sure you've probably read about, seen as well, the 1031 being under attack. I'm going to address that in my presentation where things are today and give you kind of a really on the boots on the ground perspective, as it were, since that's right in our space. So again, I just want to introduce John. Say hello.
Hello, everyone. Thanks for being a part of this today. I think it's an unbelievable time to be learning and getting updates on 1031s right now. This is something that's under assault in Congress. I know Mark and I are going to talk about that a little bit more. We just think it's an unbelievable estate planning feature that's been around for over 100 years. So we look forward to being a resource for you and your family.
And Robert Zink. Bob, go ahead, say hello to the audience and introduction.
Good morning, everyone. Robert Zink from Whitehall Parker. I would agree with John and Mark that the 1031 is under assault from Washington, and if we know anyone in power in your respective states and the political system, it'd be a good time to call them or email them, because it's an important vehicle that's been around for 100 years, and Washington really doesn't understand how it won't generate the income that they think it will to do away with it. People just won't sell. So it's important that we get to them to understand that the result that they want to come out of doing away with it wouldn't happen. So we'll just continue to work on it and keep you apprised. And John and Mark will talk about that more later.
Fantastic. Thanks, Bob. So I'm going to go ahead and jump right into my presentation on the side of the 1031 exchange, unraveling that mystery. And so after that, I'll pass it over to John to speak more about the Delaware Statutory Trust. And then to wrap it up, we'll have Bob kind of give his perspective, what's going on today, what are clients asking him, what is he seeing out there, just to give you more flavor for working with the DST. So with that, I'm going to go ahead and share my screen, get us started here. Should be, everybody should see that. You guys see my screen there? All right, let's go. Okay. All right. So yes, I'm with Exeter 1031 Exchange Services. We are a qualified intermediary. So a lot of people ask us, what is it? What do you guys do? How do you work? What's all that? So I put this presentation together, kind of give you more of a backgrounder on us, and so hopefully this answers questions that you might have, or what exactly it is that a QI does. But we operate in all 50 states. I get that question all the time. We're based here in Southern California, and we have our trust company based in Cheyenne, Wyoming. We also perform every single exchange there is. That's the more traditional forward exchanges, the reverse exchange, the build-to-suits. We're also one of the few qualified intermediaries that will take on foreign property 1031 exchanges. So our CEO has administered about 125,000 1031 exchanges over his 35-year career. The company itself has been around over 15 years now in the form of Exeter 1031 exchange. So we hold significant experience, years of wealth of experience in the 1031 space, and so we kind of carved out our niche as more of that consultative and advisory role for the client. And we always say, hey, if we have answers, go ahead, ask. We offer 24/7, 365 access too. So when you sign up with us and you get assigned an exchange administrator, the QI that's going to work with you through the whole process, you've got access to them during the week. And then on the weekends, you have questions that come up, give us a call. It's going to route to one of the business development folks like myself. You might even get Bill Exeter on the phone too. So A little bit more information on the trust company. So we spent some time getting all the paperwork together to form the trust company and regulate ourselves. It's interesting that the space for the qualified intermediaries is unregulated, and we decided to regulate ourselves, just offer that peace of mind for the client, along with everything else that goes along with a quality firm. So you want to have good fidelity bond coverage, errors and omissions insurance coverage, fiduciary insurance coverage. So every 1031 exchange we set up will be issued a qualified trust account, and we also offer through the trust company self-directed IRAs and custody accounts. So getting over to the 1031 exchange, it really is from the Internal Revenue Code, as pointed out here, but it's a tax deferral strategy that allows the investor to sell rental, investment, business use assets and defer that payment of the income tax consequence when you reinvest in a qualified like-kind replacement property. We'll go into how that works and what that kind of looks like as we move along. Benefits, obviously there's income tax consequences when you sell personal property, so that triggers that gain. And that gain can be deferred or excluded with proper tax planning. So we like to say it keeps investors' money working for them, more money in your pocket. Again, with continuing the benefits, you can, with this, the transactions are more than a tool. It's really wealth building and has been for 100 years. It's the 100-year anniversary. It's hard to believe, but it's true. It keeps more wealth in the family, and we have that morbid sense of humor in our business, but we like to say swap until you drop. So you literally can keep doing this throughout your entire lifetime, swap that property, and then at the end of your life, as you pass away, your heirs will inherit that property with a step up in cost basis, and the gain goes away at death. Little structures I alluded to at the very beginning. These are your more traditional ones. The forward exchange is what majority of the work that we do is in this space. So it's you're selling a property first, and then you're buying the property second. The reverse exchange, which is more complicated, it's got a parking arrangement and structure that's quite different, but that's where you're going to be buying your property first and then selling second. We like to say if it's something where you have an all-cash deal, the reverse exchange makes a lot of sense. And if there's financing involved, it can be a little more tricky, but can certainly work, but the lender just has to be able to lend to a third party. Improvement exchanges, you might see them called build-to-suits or construction exchanges. That's where you're going to sell your property and then use those proceeds, secure the land, and then build on that property. Then challenges with that are you got to construct that property and take ownership of that property within the 180-day, 6-month timeline. So certain markets, you can certainly pull that off. Other markets doesn't work. I mean, I'm here in Southern California, so the permitting process alone makes that incredibly challenging, to say the least. So, yeah, QIs, qualified intermediaries. What do they do? So we do prepare legal, the legal agreements, related transaction document, and receive, hold, secure the 1031 exchange funds at the sale. So the recording with escrow, the closing, the funds get wired over to us. We hold on your behalf, and then you start that process of looking for replacement property. We serve in that advisory consultative role and then guide the client through that process. So again, we're more than process oriented, QIs. We'll actually, take that call. We'll work with the client. We'll set up a conference call. You got an unusual circumstance going on, or you've got information from your accountant that you're not sure about. We'll be glad to sit down with you and figure out the best strategy that would work. Again, we safeguard client funds, of course. So government oversight is critical. You want to use a QI that's licensed, regulated, and audited. In our circumstance, it's the Division of Banking in the state of Wyoming. Make sure they have significant bonding and insurance coverage and verify that. And then ask them if they, set up qualified trust accounts as well. Confirm the qualified trust accounts or escrow accounts. So we're going to talk about qualifying use property. Investor's intent is absolutely critical. I can't say that enough. So you want to make sure that you're holding your property for rental, investment, or business use. I'd like to say about, if you're at least 2 years, you can hang on to that property at least 2 years before you'd want to sell it. But Timelines are not necessarily the everything in this circumstance. The most important thing is the intent. But 2 years is good. Year and a half is fine, but 2 years is really good. You know, before you want to sell that property, that rental property. We also run into issues with flippers and rehabbers coming in and calling and wanting to do an exchange. And I have to explain to them that it doesn't work because they're holding that property for sale and not for investment for the long term. Again, the holding periods, again, just a little bit more on that. But there is, again, there's no specific requirement on the holding period, but we like to say 2 years because that does straddle 3 tax returns. And again, the intent is everything. So if you hold it for rental, investment, business use, you're good. So talk about like-kind property, real estate exchange. Any kind of real estate does qualify as like-kind property as long as the qualifying use requirement is met. And then foreign property 1031 exchanges. So this is where if you own property overseas, rental property, then you can do a 1031 exchange. You just have to be a foreign property to another foreign property. So it can't be foreign to the US or US to a foreign country. This is a good list or breakdown of like kind. I do get this question quite a bit, especially people that are in a condo in Southern California. Like, do I have to get another condo or in the same area? No. You've got a lot of different options, obviously single, multifamily use, commercial, office, retail, industrial, undeveloped land, oil and gas rights, and then fractional ownerships. Got the DST that John is going to be speaking about here shortly. It's a really fantastic tool in the tool belt, especially, it's a little side note, but when I talk to all my clients, I always introduce the DST because we'll get into this a little bit, but you have to identify properties during the first 45 days after you sell your relinquished property. And it's a really good idea to have a backup strategy in case you want to go after a physical property. That's great, but have a DST as a backup, as that third option, just in case. Non-like-kind property, again, primary residences do not count, second homes, vacation homes, but we like to say anything that has excessive personal use, it just does not qualify, not like-kind. And then ownership interests in an entity generally do not qualify for 1031 treatment. So partnership interest in a partnership, membership interest in a limited liability company, shares of stock in a corporation. But then there are exceptions, of course, the disregarded entities like single member LLCs, land trusts, and Delaware Statutory Trust. There we go. The identification period, which is critical, you got I mentioned the 45 calendar days, that's your identification period. So that's the hardest part of this whole process. So you sell that property, the funds come over to us, we're holding that with you and for you, and then you are out there, pounding the pavement, working hard, working the phones, getting everything together, trying to find those properties. It's calendar days too, so it begins, like I said, at the closing. Strategies to extend any of this, the best thing you could do is delay your closing date if you can, or start looking at property early. That's basically what I see people do. And then, of course, what I mentioned earlier is consider using that DST option. Deadlines. So you want to complete your 1031 exchange by the earlier of the 180 calendar days, or the due date of your income tax return, including extensions. This is only an issue when the sale closes between October 17th and December 31st. But it is 45 days plus 135. So I did get that question a lot. It's not 45 and 180. So the 45 eats into that 180. And COVID impact, actually pretty much at this point, guys, we can pretty much eliminate, I think, this bullet point going forward. Just we had an extension back in April for anybody impacted by COVID during the time of their sale and transaction. It got pushed out to July, but there's nothing going forward. We have not heard anything. It doesn't look like everything's opening up at this point. So we're kind of in a new era, new normal, and adjusting as we go forward. ID requirements. So we want to look at, this is really critical too. This is you're going to be looking at the 3 property rule, or the 200% fair market value rule, or the 95% exception. The 95% exception is mostly used for, like, with portfolio managers, large number of properties. So you got to close on 95% of the value. The first two there, the 3 property rule, that's the most prevalent because that's like, I'm doing a 1-for-1 swap, then they're going to use the 3 property rule. Give us a list of 3 properties you would consider closing on, and then you just have to close on one of those within the 180-day time frame. And the other thing I'd like to mention, may as well do it here, is once you get to day 45, you can't update that list, so that the list is locked after day 45. So you want to really be hustling during the first 45 days, update the list, have backups, put whatever you need to do to get it done. But once day 45 hits, that's it. So the other one is the 200% fair market value rule. So that one's good if you're going to be identifying more than 3 properties, so like 4, 5, 6, and then you just get, you got to close on essentially like you have $1 million sale, let's say as this sale property. Just make sure those properties that you've identified, property 1 through 6, they don't add up more than $2 million, so double. So that's essentially how that rule works. It needs to be specific, unambiguous. You need the address, legal description of the assessor's parcel number, and it needs to be delivered to the QI. So these things happen as 45 days, calendar days. So if your deadline ends on a Saturday or Sunday, you still need to get that paper submitted, or if you haven't already submitted it once, you still have one last shot, like midnight on the 45th day. So send it in, email, fax. We'll verify we received it, sign off on that. That's also critical. Reinvestment requirement. In order to defer all of your income tax consequences, you must have the intent to reinvest in like-kind replacement property, trade equal or upper in fair market value based on the net sale price, and then reinvest 100% of the equity and net cash proceeds into the replacement property. So you can add cash into your exchange, but you can't withdraw any cash without having a taxable event. Partial 1031 exchange transactions are okay. They do result in a tax consequence. So there's different ways of looking at it. So you could either, pull some equity out, that'd be cash boot. So you want, some funds for paying off some debt in other areas. That's fine. Just you coordinate that at the closing. But you want to make sure you don't go down too far in value where it just doesn't make sense anymore. But there's also a mortgage boost. So some people have a mortgage from the relinquished property that needs to be replaced in the value needs to be replaced in that replacement property. So if they come up a little shy, there's different areas that there's mortgage boot issues as well. So obtaining you could trade down in value through a 1031 exchange transaction again, or obtain a larger loan or other debt on the property, which results in cash left over. So these are all issues that you got to be aware of when you're doing a partial exchange. Now, in just to kind of wrap that whole idea up, if you are considering that, talk to us early, and we'll make sure that that we'll look at the numbers and verify that that does make sense for you. You're not trading down too far in value. That's it on my side. This is my contact information here in San Diego. We're located at 404 Camino del Rio South. My direct number 619-764-6332. That gets my desk line, or if you call the main line, that's fine. They'll find me. I'm the only mark that works here. My email address there is mturok@exeterco.com. There's our address there in beautiful Cheyenne, Wyoming, as well for the trust company. Real quick update. I'm sure we'll all talk about it a little bit, but the attack on the 1031 exchange. So the Biden administration had introduced through the American Families Plan an idea that would be to essentially well, we thought initially eliminate the 1031 exchange, but it's actually it's not looking at a full elimination. What they are talking about is taking it down to a $500,000 capital gain limit. So what we're hearing is, we've heard all kinds of stuff. I mean, from the time that when this was introduced, it kind of took everybody by surprise, not just our industry, but folks on Capitol Hill also were taken by surprise, like on the House Ways and Means Committee. The folks on that committee were not aware that that was going to be put into the plan. That being said, we've also heard that Speaker Pelosi is looking for that bill to be introduced and before the break, and they want to see where everything's at, and we've got to see from there where do we stand. Is there a fight to even fight? If there is, which then if it's introduced, then we've got to get out there, do our own essential lobbying efforts, and we are doing that. As far as there's a lot of interest out there, like the National Association of Realtors, Federation of Exchange Accommodators, on Capitol Hill, pounding on doors. But what you can do as an investor is, and I tell this to everybody, is reach out to your local congressman, because they do listen. They do take a vote. I mean, they'll look at a vote that they look at who is interested in this issue. So they get their tally, and they're saying, okay, well, we've got a lot of interest on this 1031 exchange to save us. So, I mean, so that's what you can do. Reach out to your local congressman, your local or your state senator, and let them know that you want to save the 1031 exchange. And that's my advice to everybody out there. But as far as where we're at right now, we're kind of in a wait period just to see what's going to happen. How aggressive is this fight going to be? But you don't want to take anything too lightly. But this does come up every few years. It seems like the 1031 exchange has been a punching bag. So we do take it seriously, and that's kind of where things are. But it looks like right now, if they were to introduce legislation on this, that you've got the cap being 500,000 per couple, is what I understand right now. So with that, I'm gonna well, I guess stop sharing my screen. I'm gonna pass it over to John here. He'll talk to us more about the Delaware Statutory Trust. Give me one moment, everybody. Let me go ahead.
Yeah, while Mark's doing that, I always like to start with, when you're doing a 1031 exchange, there's multiple team members involved. You're only as good as your weakest link, as they say. So it's very important that you're working with your CPA, you're working with a very high quality advisor like Bob. You're working with a qualified intermediary that has done hundreds of thousands of exchanges in multiple states, where they have the ability to work with you on this. And I just think that is a huge deal, and you really want to be surrounded by professionals. And I can vouch for Mark, for Exeter, and Bob. They do an excellent job with education and really putting the client first. Continuing on Mark's comments on the American Families Plan and the 1031 really being assaulted right now. This has been on the books for 100 years or so. Every cycle, every 10 years, it comes under assault. Seems like it's more under assault and being called out more by name now. I think the bottom line is there aren't the votes right now to have this included and have 1031 go away. And I think the main reason is, it's been around for a while. It's very strong with Republicans. And then there's kind of mainstream or right-leaning, physically conservative Democrats who also don't want any changes there. So, I echo the comments that if this is important to you, as any issue is, you should reach out to your local representatives. My role here is to talk about Delaware Statutory Trusts. Cantor Fitzgerald, my firm, has been involved in this business for quite a while. And, the IRS blessed the Delaware Statutory Trust structure as a way to be able to fulfill your 1031 requirements. So it's the same process as if you bought a Walgreens or a duplex on your own, but you're using a large institution like Cantor to go out and buy an institutional quality asset, and you put that into a trust. That trust is set up in Delaware, hence Delaware Statutory Trust. Revenue Ruling 2004-86 is the reason we're able to be here. That blessed or approved the Delaware Statutory Trust to work for 1031 exchanges. So IRS Code 2004-86 is why you're able to use a passive investment to fulfill your 1031 requirements. We're going to talk about the advantages and the disadvantages of the 1031 vehicle to fulfill 1031 requirements. So with the DST, you get access to what we would deem an institutional asset. The way we define that is an asset usually between $100 and $200 million in assets. It's going to perform differently a big multifamily or Amazon distribution center than that local duplex. And so you get access to higher quality institutional assets. You're a passive owner. I think with COVID and the year that we've been in, a lot of people like to do their own real estate. I know my family likes real estate. They like to manage on their own. And then it became very apparent for some people it's age. You know, my father is in his mid 70s, managing an asset or fixing the stairs when they break, maybe was attractive in his 50s, but not at 70s. It's more about lifestyle. What we've seen since the pandemic is I think people appreciate that time is our most precious commodity. And as a result of that, you know, younger people want to be owners in real estate, obviously, but they want to do it in a passive way. So we're seeing much more interest in younger real estate investors in this structure. A couple other highlights is diversification. You know, you can come out of $1 million or $2 million asset, you know, in California, and you can diversify into 2 or 3 or 4 different Delaware Statutory Trusts where you're investing in different sectors. Maybe the triple net long-term lease sector, maybe medical office buildings, and a large institutional apartment. So you have the ability to diversify. Next benefit is a new depreciation schedule and non-recourse debt. You are not personally responsible for this debt, and we work with a lot of people that have owned their real estate for decades and decades, and there's no depreciation left. The reporting is very simple. It's a grantor letter, very similar to a K-1. Lower minimums. Our minimums now are $250,000. So you can get some diversification and you can close with confidence because we've got the asset for you. We've got the financing, and you have a chance to review this and see if it makes sense for you, especially with estate planning and, you know, using the 1031 legislation to give assets to heirs at stepped up basis is very, very attractive. So those are some of the benefits of it. Let's talk about some of the restrictions, you know, and Mark mentioned flippers and people that want to do stuff on their own. You know, DSTs are illiquid. So most of them have a 5 to 7 year time horizon. So you're going to be getting your cash flow on a monthly basis for that time period, but you're making that commitment for 5 to 7 years. These are illiquid. So we want to work with people and make sure that, you know, this fits in with their overall strategy, that you can't call us in 2 years and say we want to sell. You know, there is no national exchange. You can't go to the NASDAQ and sell this ticker symbol. And investors are giving up the ability to decide when to sell. You know, let's be honest. If you buy a Walgreens, for instance, you know, you could buy today and you could decide 6 months later to sell it. Probably not a great business decision, but you have that ability. Important thing here, the DST is illiquid. You're making that commitment for 5 to 7 years. You're getting that time frame, making sure everyone is on the same page. The sponsor is controlling the asset. They are going to work in a fiduciary way to help you with this asset, provide that cash flow, maximize the exits. And then because it's actually a structured fund, there's going to be a little bit more fee, mostly an acquisition fee that a sponsor charges in order to compensate them for all of the research that they've done. So, you know, we always want to say we want to be fair and balanced. There are great upsides to this, but clients need to understand the downside. And if this money is, you know, put aside in a couple of years for something else, the principal, the Delaware Statutory Trust is probably not a good option. So just kind of understanding where it fits. And then I usually use the analogy of a missile launch, meaning everyone needs to turn their key at the same time. The advisor, Bob, Mark, the QI, the client, we work with a lot of CPAs and get them involved so they're aware. And I just think you need to really build out your team so you feel comfortable with them. And this team that's been assembled has a lot of experience. And I think it's been apparent, we focus on education. We want you to understand the pros and cons of the decision that you're making, and we can help with that process. The only other things that I think are important is we have some really high-end tax calculators that we can work with Bob and get out to you, where you can run some scenarios, pay the taxes. What does that look like? Use a Delaware Statutory Trust. What does that look like with cash flow, and what do returns look like? Or there are some other investment strategies that may make sense. So just to know what the options are, understanding what you as individuals are trying to achieve in the short term and the long term are very, very important. So with that, I'm going to stop sharing my screen, and we'll go back to Mark for more of a discussion before we do Q&A.
Perfect. Thank you very much, John. As always, just a tremendous presentation again, and I think people get a real good sense of how the Delaware Statutory Trust works, how it can really help them. And I also, want to mention to everybody in the on this webinar today, and there is a chat room available. So if you do have questions, feel free to pose them to us. I've got a couple that have already come in that I'll mention here at the end of our time. But I wanted to go now to Robert Zink and Bob from Whitehall Securities. Wanted to get or have you share with our audience just kind of your on-the-ground perspective, working with clients with the DSTs, things you've seen, any challenges, any things that wins, especially, and just very overall flavor for working with the DST and working with Cantor Fitzgerald in particular.
Thank you, Mark. John, working with investors every day, I hear continual stories, and John went through the pluses and the negatives. I think the negatives kind of go away. I hear as recently as yesterday from an investor that was on the phone with he and his real estate broker, and he said, well, what are the disadvantages? And I said, well, you're not going to have control anymore. And he thought about that for a minute, and he says, what does that mean? And I says, well, it means that you're not going to hear from your tenants. This was a 69-unit apartment house. You're not going to hear from the lender, the vendors. There won't be any cash calls. Your time will be yours again. And this gentleman was 72, and he kind of, again, a pause, and he said, well, initially that would make my wife and grandkids real happy. And then after a few months, he says, it would probably make me happy. He says, I've worked very hard to get here. He had a significant equity in this apartment house. He'd bought it, worked on it for 24 years. And he said that getting my time back would be very important to me. And I think most people find as they get older that joy that Mark mentioned, John mentioned of his father, that fixing stairs, replacing things when you're 40, 50, 60 is okay, sometimes even good, but at 70, it's not fun anymore. And getting our time back is important. Two other kind of recent stories that I've gone through. John mentioned diversification. Recently, I helped a lady who, again, had sold an apartment house. She got a significant amount of money out of this apartment house, and it was probably 70% of her net worth. And we exchanged her into a leased Amazon building in Indianapolis on a long-term lease, an apartment house in Huntsville, Alabama, where the Air and Space Facility is going to go, and a self-storage portfolio in the Southeast. And as that was identified and the process is moving along, she called one day and said, Bob, what happens if all three of these properties fail, if they go upside down? This would be devastating to me. And I said, well, Nancy, if that happens, that Amazon in Indianapolis, apartments in Huntsville, and self-storage in the Southeast. If all three of those properties go upside down, then the country went upside down, and it won't have mattered what you did. And she thought about that for a minute and laughed and says, yeah, I guess you're right. So as John mentioned, Mark, a little bit earlier, it gives one the ability to diversify into asset classes, into markets that are varied, and into different sponsors. If you could put something with Cantor and say, you know, I don't want all my eggs in the Cantor Fitzgerald basket. Who else is out there? There are other competent sponsors. I would encourage you to pick one of the larger ones that's been around a long time, that survived the last downturn, and doesn't have to do a deal this month to pay the rent or salaries. So that's very important. It's been talked about a little bit to pick somebody that's been there. Back to Mark's role in this. Sometimes we have ownership issues, such as a LLC or something. It's important to have a QI that can solve those problems if they come up, and work with you. And that's something that I've done a lot with Mark, and they're very good at solving those problems. Another issue that has come up recently is I had a large investor call a couple of months ago who I'd known for a long time through a national marketing group. And he said, Bob, I'd like to learn more about DSTs, and I want to talk to you about that. And can we meet? And I said, of course. And I said, Joe, why now? Well, this gentleman had just gotten back from the doctor, and he had a dementia diagnosis. As we get older, things happen. It's not always dementia, of course, but sometimes it's, my grandmother broke a hip 2 days ago. Her life has changed dramatically. Her husband's life has changed dramatically. So as we get older, giving up control and getting our time while we're still healthy enough to travel, play tennis, see grandkids, whatever it is you want to do, but getting control of your time. And, you know, I like to say that owning a DST has all the advantages of owning real estate by yourself without any of the management responsibilities. So if you have any questions, get a hold of me, get a hold of Mark. We can put you together in a conference call with John, but we're here to help you, and it's a viable option when you're considering a 1031 exchange. So, Mark, with that, I'll give it back to you to wrap up.
Fantastic. Thank you so much, Bob, for that, and just giving that hands-on experience, and just letting people know, giving that sense of where this all plays in their life of investing and where we're going. And just, it is a tremendous tool, and it makes a lot of sense for a lot of different people in different walks of life and different stages of life too. So we do have some questions that come in. I'll try to field some of those right now. The one thing that I was asked earlier was, when's the best time to reach out for a qualified intermediary service, and also reaching out to the DST sponsors and brokers and things like that. So I'll answer my side. I'll pass it on to Bob and John. But from our perspective, the best time to reach out to us, I mean, especially right now, our title of our webinar is "I'm a Seller Now," and I can't tell you how many times I get everything set and everything in motion, and then all of a sudden escrow calls that everything's shifting again, and so 30-day escrows become 7-day escrows, and everything's moving very fast. So I say right now, right when you get that solid offer, and we know who your escrow agent's going to be, your closing agent, if it's an attorney on the East Coast or title, whatever, whoever the closing agent's going to be, we know who they are, and we have a timeline. Give us a call right then. We'll get the paperwork started. The application's very easy to get through. I'll walk you through it. We have to do everything electronically, and everything's just very simple process to get it started. So that is the most important thing. Get in touch with us right away, right when we get that offer in place. And for John and for Bob, it's we come to the point where if they're looking at DSTs, I tell as early as possible, but you can also speak to the point of how fast you can get an investor up to speed on the DST. And I always say, going from no knowledge to closing, John and Bob, you say like a week and a half, something like that. So you want to speak to something like that? Like, best time to reach out to you guys when they're looking at the Delaware Statutory Trust.
Yeah, Mark, thanks. I can jump in, and then Bob can add some color after. Just as Mark said, you got to get involved and get the players involved early. There are timelines, as Mark has outlined, and I know once a month I get a call from an investor saying, I just took constructive receipt of this money, now I want to do a DST. And our hearts sink because we know that person has had a taxable event. So for those of you who are on the call, we probably have some experienced people that have done a lot of 1031 exchanges. For those of you that haven't, if you're going to write down one note, it's get the qualified intermediary involved early, and start having conversations with Bob about what your needs are and seeing what vehicles fit. The beauty behind a Delaware Statutory Trust is that we have the asset, we have the financing, everything is in place. So you have the ability to look at program 1, program 2, program 3, program 4, understand your risk profile. Are we trying to have major appreciation, or do we want more higher income and lower risk? So those are the types of things that getting people involved early really helps with. As far as once the money is with Mark at Exeter and you're live on your 45 days, the beauty behind the Delaware Statutory Trust is usually within 1 week, if you'd like, we can go over an offering with you, answer questions, make sure it fits your criteria, do some paperwork, and get you cash flowing within a week of the close. And these DSTs pay on a monthly basis, and they're prorated on the number of days in the month that you're an investor. So if you invest today, I don't even know what day of the month it is, 23rd, 24th, 22nd of the month, you're going to get a check in the middle of July, prorated for how many days in June you were in. So a lot of investors like that cash flow. Some of them live off the cash flow. So to be able to get that cash flow generating very quickly is attractive. So I'm not sure if Bob has anything else to add to that point.
Well, I just think it's important to get a hold of your QI as soon as possible. So if there are issues, oftentimes recently, had an exchange and who owns it? Well, I own it. Well, turns out this individual didn't own it. It was in a trust, and the trust had some issues, and it was missing a signature, and things get lost over time in the files. So get to me and your QI early, so if there are issues, we can solve them. A trust attorney, LLC attorney, whatever. These problems are solvable if there's time. And then you want time to pick a property. Well, Cantor Fitzgerald almost always has great properties available. Maybe the property that's available is in a part of the country you don't like for some reason. I mean, I have people that don't like Texas for whatever reason. All right, but if we've got time, we can get properties in other areas. So leave as much time as possible. On the positive side, a couple of weeks ago, a person lost a loan on a deal. They needed to get an exchange in place, and we got them in place the last 5 days of their 45 days. That's doable, but it's tough, and there aren't as many options. So keep as many options available to you as possible by leaving as much time as possible. There's not such a thing as too much time in the exchange process. So I'd say that's the conclusion of that, probably. Do we have any other questions, Mark?
Well, we do have one here. It's asking about John's DST calculators for downloads. So I guess that's you want to speak to that one, John, or Bob?
Yeah. So that's something you're going to work with Bob on. So you can, when Bob reaches or when Bob gets his contact information, you can reach out to Bob regarding that. So it's not something that we release a spreadsheet to you. We ask you for some inputs, purchase price, depreciation, those types of items, and we fill in 3 or 4 inputs for you, and then we send you a PDF copy through Bob. So if that's something that you're interested in, we can do that, and you would start that process by reaching out to Bob.
I would piggyback on that a little bit. People are always reluctant as they're giving up control of well, what's the closing process like? This DST department at Cantor Fitzgerald, that's all they do. The closers there are the best in the country, and they're doing it all day long. So if you need the cash flow to start in a few days, they'll get that done. The paperwork, all of this is very seamless, and it's a little bit voluminous because of being involved with the SEC, the Securities and Exchange Commission, but it's not complicated. It's just a little bit lengthy, but it's not a tough deal. But they'll get it done quickly and then get a closing packet out to you, and you'll have everything you need for your accountant and filing taxes on a go forward. But it's a very seamless project and allows one the ability to buy property in high growth in both population and jobs areas of the country. You know, I live in Portland. There's lots of people wanting to get out of my town. We make the news daily for lots of reasons, and none of them are good. So people are leaving here to go to places that are less onerous politically and tax-wise. Mark, you seem to be muted.
I am muted, thank you.
Oh,
The last question I had was asking about investing in the DST. With a similar loan to value ratio, are cash flow projections before or after the debt?
Yeah, so I can speak to that. When a program comes out, we show you the asset, we show you the debt, we show you the loan to value. So the distributions is the term that we use, are tied to the equity. Now, that equity is tied to the asset that then has leverage on it. But for the most part, you see offerings kind of in the 30 to 60% leverage, and then more predominantly in the kind of 45 to 55% leverage. And so it is tied to the equity that you invest.
Yes, and that's what I have for right now for questions. Gentlemen, do you want to kind of wrap up, or just, you know, like I said, for everybody out there, best thing you can do about the 1031 exchange or the threat against it is reach out to your congressman, reach out to your senator. So I don't know if you guys want to follow up on any of that, but I appreciate everyone's attendance today. Mark Turok, Business Development Officer for Exeter 1031 Exchange Services. If you have any questions on the 1031 process at all, feel free to reach out to me. Again, my number is 619-764-6332. Thanks. And John, you want to sign off, and I'll let Bob sign off?
There's always the notion of, to live in interesting times. And I think right now is one of those time periods after the year, 15 months that we've been through. I think really life and the world is coming back in different orders, but the US really with where we're at is coming back. And there's just a lot of demand for people to trade out of real estate. And I'm happy to be a resource for everyone on the call. Bob?
Yeah, I'd say we're a resource for you, and there's product that Cantor Fitzgerald and other DST sponsors have that we haven't talked about today. If you have something more complicated, high debt options, different things. So there's lots of product, lots of options. But probably the biggest advantage here is you can exchange into multiple properties for estate planning, for diversity, for risk mitigation, and we are out here for you at any time to help solve those problems. So feel free to give any of us a call. My phone number is 503-880-6968. Appreciate you joining us today.
Well, thank you both very much, and everybody on the on this webinar. Appreciate your attendance today. You will get a copy of this as a replay as well. Just feel free to share that around. We really like seeing that. We have a YouTube channel out there, so you can find us our Exeter 1031 Exchange YouTube channel. Just search it, you'll find it, and we'll be up there. But appreciate that, everyone. We'll be back again. We like to do these monthly, even coming out of COVID. I think it's important to keep this message going even stronger. It's the it's a seller's market right now for sure. So we'll be back next month and look forward to speaking with you again. And feel free to share this with as many people as you can. Gentlemen, John, Bob, it's a pleasure again working with you. Always look
Thank
forward
you,
to
everyone.
sharing time with you every month. So, hey, take care, everyone. And with that, I'm going to sign off. So thank you all very much and have a great rest of your day. Bye now.